we are right now with the Fed talking about tapering, I mean, that's pretty much laughable because the system has survived since 2008 on life support, if you will. And now they're talking about taking life support away. It'll be all over.
This week's specials with Miles Franklin Precious Metal Investments. 2022 Silver Austrian Philharmonics for only $375 over spot at 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We have a first-time guest today. Bill Holter is a frequent contributor to JSMineSet. He's a well-known analyst in the area of precious metals and sound money. He talks to his audience through his extensive presence online. He's joining us here on Liberty and Finance for the first time. Bill, thanks for coming on Liberty and Finance for the first time.
Thanks for having me, Dunnigan.
You've spoken about a wide range of topics. I've enjoyed listening to your interviews. I've heard you speak on the Wall Street Silver channel, on other channels that you've appeared on. Miles Franklin, you were even on their Mugs and Metals panel one time at the same time that I was participating. We wanted to talk with you today about a topic that's on a lot of our clients' minds. And I'll mention up front that both you and I are external brokers for Miles Franklin. So if people want to reach out to either Bill or to myself, feel free. But the topic that we wanted to get you to weigh in on several aspects is how will the reset affect me? People are looking at that, what's ahead. They don't know exactly what's coming, but it doesn't look good. And they are wanting to protect themselves, protect their families, protect their future. And there are some real key aspects. So I'll just rattle off a few of these and we'll walk through them one by one. First one is, will I be able to access my bank account and withdraw my money? I'll call it money, but it's currency from my bank account. So concerns that we have about people having access at all to their accounts, whether it's with a bank or with a brokerage firm, that sort of thing. Another one is, how will I do transactions? How will I buy or sell anything? And I'll go back through these again, but just, how will I carry on my daily affairs, pay my bills or be able to buy food or whatever. And the next one is, how will debts or mortgages be affected? Does the biggest borrower win? Because the dollar goes down to close to zero, and that means we're practically a debt jubilee, or is it not that way at all? Another one is risk of confiscation. Is it a credible concern? Happened back in 1933, nationalization under FDR. Should it, will it, could it happen again? If it does, is there strategies I can use today to reduce my risk? Why do I have confidence in those strategies? And the last thing is other non-financial assets that people should be seriously considering. People have suggested livestock, land, tools, things like that. So those are the main topics. If we're looking into a future that's uncertain, but has grave concerns for our families, how it's going to affect us. So before we plunge into that, you want to give people just a quick snapshot of how you got into this and what brought you into this sound money arena in the first place.
Oh, well, that's an easy one. The first book that I opened in college, the very first class that I went to was Econ 101. And the very first page of that book said, we don't know why the Great Depression happened, but we do know it can never happen again. And that set me off on finding out for myself why the Great Depression happened. And basically, it was easy money that led to too much debt, too much credit, and it was just basically a credit cycle that blew up. So over the years, with that in the back of my mind, I've always been digging for, the truth, if you will, the truth about money. And obviously, every road that I traveled down looking for truth or true money, it ended up with gold and silver. So it started before I even started my career. It started when I was 18 years old, the very first book in college.
If we could go ahead and plunge then on into the first question of how the reset will affect me. A lot of people are concerned that it could happen again, unlike what your book in college claimed. And That's the idea of people saying, will I have access cut off to my bank account or my brokerage accounts? I know my wife and I have shared our particular story in the past of the 2007, 2008 global financial collapse, where we got a notification. In fact, we were wary going into that. So we told our brokerage, which was TD Ameritrade, told them, we don't want to have any stocks right now. We want to just go into a money market fund. So they put us in this fund called the Reserve Fund, and it was earning like 1% or 2% of interest, which was better than their 0.25% or whatever that the FDIC insured fund was. Well, anyway, we got a notice from them saying, until further notice, your ability to withdraw from that fund is suspended. And we said, no. We weren't in stocks. We weren't in anything. We were in a cash equivalent money market fund, and we weren't invested in any of this stuff. They said, well, it's because of the Lehman Brothers collapse. No, we weren't invested in Lehman Brothers. Well, your fund was. So we got hurt, and we got access to our funds cut off until further notice. Can you talk to people about how realistic their concerns are? Will they be able? Nobody's asking you to predict the future, but your perspective, your opinion on, should we have concern about being able to have access to our bank accounts or our brokerage accounts in the event of a reset?
Yeah, you should absolutely be concerned. At this point, this is no longer opinion. This is math. Mathematically, this system, the current system, cannot continue because there's too much debt. The debt that's out there now can never be repaid. And in order to repay it, they've got to create the capital for the interest. In other words, the interest doesn't exist to pay on the current debt. And it goes back to Richard Russell's inflate or die. They're going to have to continually inflate. And where we are right now with the Fed talking about tapering, that's pretty much laughable, because the system has survived since 2008 on life support, if you will. And now they're talking about taking life support away. It'll be all over. Now, as far as your banks are concerned, your brokers are concerned, if you own stock, and myself and my partner, Jim Sinclair, have talked about this. Jim talked about this going all the way back to 2004, maybe 2005, that if you have stocks and you're not a trader, you should have those certificates issued to you. That way, if your broker goes bankrupt, it doesn't matter. You have your certificate. And if there's another broker that's still open and running, you can just go to another broker, deposit your securities, and sell them. I suspect for a spell, markets, banks, etc., are going to close, whether it's 2 weeks, 2 months, 6 months, who knows? But it's a very real probability at this point that you're going to see markets close, because when they do lose control, of all markets, basically, what's the reaction going to be? I would suggest the reaction is going to be they pull the plug and they close markets. As a matter of fact, you just saw that happen today in Turkey. Their central bank has lost control of the currency. The currency is collapsing. Their market was down really hard last week. It opened down 5% today, and they closed it. So worrying about markets and banks closing, that's a very real concern. Now, as far as the banks are concerned, I typically don't keep much more than 6 months worth of bills in a bank. If I get a large inflow of money or a large check or whatever, my personal savings, I just buy junk silver. I have it stored. And obviously you have to have metal on hand, but I use junk silver as my savings because I know that I can't wake up tomorrow morning and find out my bank closed and the accounts have been bailed in. And if you look at FDIC legislation, the bail-ins are already, the laws are already written. They're already on the books. So this next time around, there will not be bailouts. There will be bail-ins.
That's one of the concerns that people have is because of a lot of people aren't aware of the implications of all these laws that are passed in Washington are named the opposite of what they mean, including the Dodd-Frank
Right.
Consumer Protection Act. Can you explain to people what the major significance is of what they think is their money that's in the bank under the Dodd-Frank Act, and why that should be of concern?
Well, the way the law is actually written, once you deposit, quote, deposit money with your bank, it's no longer your money. What you've done is you've lent the money to the bank. And the way the law reads, you are a creditor. So if your bank goes down, then you've got to get in line in bankruptcy court to get your portion back. And as I just mentioned, they're going to bail in rather than bail out. And if you want to see the roadmap for a bail-in, just go back to, I think it was 2013 or 14. Look at Cyprus. People went to bed on Friday night with €100, and they woke up Monday morning and only had 30. So that was the test bail-in, and that was what, 7-8 years ago.
How about the next question that people have is about what their ability will be just to carry on the normal course of their life. How are they going to do transactions? How are they going to be able to buy and sell, or get food, be able to pay their bills in the event of a currency crisis or a credit crisis? Any strategies people can use to be able to carry on in that regards?
First off, the ability to pay your bills, the ability to transact is going to be severely limited if banks, if the banking system closes, then it's a big problem. You'll obviously be able to barter with junk silver with a local farmer or what have you. But if you're thinking that Walmart or your grocery store is going to have food, I think you're mistaken. So it's a good idea to store up on food. If you can only store up for a couple weeks, 2 months, do it. If you can do 6 months, do it. If you can do more, do that. I think it's a valid concern wondering about paying your bills. And my suggestion on that is pay all your bills 6 months ahead or a year ahead if you can. That way you're at the end of the line, being either shut off from electricity if the power company's still working, shut off from water, foreclosed on your home, or if you got a loan on a vehicle, that won't be repossessed. In other words, you're at the back of the line. If you paid 6 months in advance or a year in advance, it gives you a cushion where nobody can come say, hey, you owe me something. And the masses will be in that situation. So I think that's a valid strategy.
I think you've led us into a related question that was, if the currency is going down the drain, does the biggest debtor win? Because it seems like there's an advantage on paper, on math, to the person who's the creditor. If I owe on a mortgage, whatever, some huge number on a house, and now dollars are almost worthless the next month or whatever, sounds a lot easier to pay off your mortgage at that point. What risks or benefits would there be to people think, because some people ask the question, oh, should I go take out a loan on my credit card to buy metals, that kind of thing. How prudent versus reckless do you see that kind of a course of action?
First off, you need to understand that the banks are not going to lose. It'll be the people who lose. It'll be the population. If you go back to Weimar Germany, what did they do with loans, with mortgages? What they did was they rewrote all the mortgages into grams of gold at the time that you borrowed. And obviously it was easier to do back then because gold was basically pegged. Gold and the dollar at the end of the 1920s, gold was $20 an ounce. And then there was a relationship between the Reichmark and the dollar. And then the Reichmark started collapsing. And once it fully collapsed, what they did was they rewrote all the mortgages in grams of gold. So no, the borrowers did not get to walk away pretty much free and clear by, dropping a trillion or not a trillion, 100,000 Reichmark note, which was not even worth a cup of coffee.
So it sounds like your advice to people is to not assume that just because the dollar is going down every year, it's going faster than ever before, that's going to necessarily help you out as the little guy, as the borrower, that you're not going to get a free lunch out of that.
Right. I don't think you're going to get a free lunch, but one good strategy is if you can pay your mortgage off and you've locked in a rate of, I don't know, 3%, 4%, 5%, I would be inclined not to pay the mortgage, but to hold metal alongside that. In other words, pretty much my whole life, I've owned enough gold and enough silver to pay off all my debt. And this goes back to when I was in my 20s. So it gave me comfort knowing that if the system did collapse, I would have the ability to pay my debt off in something that was not going to bankrupt if the entire system bankrupted.
Talking about systemic bankruptcy, that kind of thing, about the value of things going down the drain, there's a different risk that people are concerned about, and that's the potential for government confiscation. We talked about bank bail-ins, that's like business confiscation. But what about the government itself? People are really concerned, some more than others, about the potential for government, whether you call it confiscation or nationalization of their assets, including their financial assets like precious metals. Where do you stand on your view of the real risk of government nationalization or confiscation, and what you believe are effective strategies to mitigate that risk?
I think it is a possibility. You've seen governments go down those lines, many times throughout history. Can they confiscate? Obviously, a bank bail-in, that's a way to confiscate. But can they go and get your brokerage account? Can they get your IRA or retirement accounts? With the IRA and retirement accounts, what they can do, and I would say if they do anything, this is the way they would do it, is that they would take your assets and then replace it with some type of bond, some type of monthly income that to start with looks good, but with the dollar being debased, a year or two later, it's like you lost your pension. So, that's a possibility. They did confiscate gold in 1933. Of course, they revalued it in 34 once the population did not have gold any longer. But if you're worried about confiscation of gold, what you should look at would be the pre-1933 Liberties and St. Gaudens. Those are considered collectibles. And I mean, you could have 1,000 ounces, 5,000 or coins, 0.9675. You could have, 5,000, 10,000, $20 gold pieces, and you should not legally be considered a hoarder. You'd be considered a coin collector because they are collectibles. I don't think though they would get to the point of confiscating silver because there's not enough silver, there's not enough monetary value to be had, and most more silver gets used than gets hoarded. So what happens is you're looking at it's an industrial metal, it's a medicinal, it's electronics, etc. So I don't really think that they'd be able to do it with silver, but they would try with if they're going to do that, they would try with gold. But in today's world, let's go back 2 years ago. If you talked 2 years ago about what's actually happening today, where they're talking about mandatory vaccines, you got to wear a mask, you got to stand 6 feet apart, blah, 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 you would have been called a stark raving mad lunatic, and people would have laughed at you. And now, what is it now? It's, quote, the new normal. I think this is going to come to a head. I think a lot of things are going to come to a head in this coming year.
Back on I completely agree. We've talked with many people about even the portion of like gold and silver that even non-gold bug financial advisors will say, oh, you should probably have 5% or 10% on the side or something. But that's during ordinary times. And how ordinary are these times? As you just mentioned, also when people ask me about the potential for government confiscation, or will the government abide by the rules that were written into the 1933 executive order by FDR the next time, if it, here it is 80 years later?
You don't know. You don't know for sure.
But one fine point, you mentioned these pre-1933 coins because they're collectible or potentially collectible, depending if they're graded, that kind of thing. But right. The exception, because that falls into, if I understand correctly, and I'm not firsthand expert on this, but I heard that in the original executive order, there were like dentists and jewelers and collectors were not subject to the same restrictions that ordinary people did who had gold coins in their purse. But the idea of trying to claim that you're a collector if you're stacking 50 or 100 of the same style, same age, same grade of coin, it looks a lot more like a stacker than a collector. Is there any reason that people should think if the government abides by that old rule, that they'd be better off if they had a variety of sizes or ages or grades or types?
Yeah, absolutely. You should obviously, you don't want to have all MS-63 Liberties or all MS-63 Saints. You do have graded coins. You probably want to throw some $10 and $5 coins in there, but you want to do 62s, 63s, 64s, do libs, do saints. I mean, don't take $1 million and say, this is what I'm going to put into gold. And then you make a purchase and you end up with all the same year, all the same grade. You don't want to do that. One other thing I want to mention is in my mind, there is a very real possibility that you see a nationalization of mining properties in North America, simply because, in my opinion, the U.S. has already offloaded much of their gold. And at some point in time, in order to function with China, with Russia, who both have accumulated gold over the last 10, 20 years, in order to function or compete with them, the U.S. is going to need to have gold on hand. And one way to do that would be either to force the mines to sell to the government or nationalize the mines. So it's probably not a bad idea if you own mining stocks, which mining stocks give you tremendous leverage, they should be geographically diversified.
Got it. Yeah, there's even some mining companies that it comes built in. They have geographically diversified operations, so you get that just right out of the box. What about the attitude that some people hold to, that if you buy, like, for example, U.S. minted coins, like the American Gold Eagle, American Gold Buffalo, and that's all they want because they say that'll keep me safe from government confiscation. Do you subscribe to that theory? And if so, why?
Maybe. U.S., what you're talking about is basically U.S. mint lineage to the coin. If there was a confiscation, I would think it'd be a lot easier or palatable, if you will, to tell people, if you own Krugerrands or Maple Leafs or bars or generics, you got to turn them in. We sold you the Eagles, we sold you the Buffaloes. We can't turn around and tell you have to give them back to us. So there is a possibility that owning U.S. mint lineage coin will work. It certainly should be one step above foreign sovereigns and generics and bars. But going the next step, obviously, is to go to the pre-33 libs and saints.
Your first assertion there about it may be better to have U.S. mint lineage gold coins rather than non-U.S. mint. The thing that seems odd about that is that back in the 1933 executive order from FDR, that kind of started this whole concern in people's mind, was he was explicitly telling people to turn in their U.S. minted gold coins. I mean, that was what people had in terms of gold, was those gold coins that came from the U.S. mint.
Right, but that's exactly right. That's what circulated. That's what people had. Basically, the government was calling in the currency, because gold and silver were currency, and they were interchangeable for dollars. And that's the reason the dollar had strength, was because it was backed by gold. You did have gold certificates, you had silver certificates, and a lot of people make the mistake and say, oh, well, the dollar was, some people say the dollar was the strongest thing on the planet, which is not true. The strongest money on the planet was gold, because the dollar was devalued 70%, or I should say gold was revalued 70% higher from $20.67 to $35. So yes, the dollar did well, but gold did the best.
So even today's modern gold American Eagles and gold Buffaloes have face value marking, they have legal tender status. So how are they? I'm really trying to help provide the opportunity to articulate the case on why they would be considered preferred as far as a haven against government confiscation, since they are like the pocket gold coins of the 1933 era, legal tender from the U.S. Mint. Why would we have any confidence that there's a benefit to owning a gold eagle or a gold buffalo as opposed to a Canadian maple leaf if it came to government confiscation? Because you were making the point that, well, back in 33, those were currency.
Right. Well, because the mint sold them to you. Now, can they turn around and say, we sold them to you, but you have to give them back? I'm sure they can, but it would be more difficult than saying, if you have a maple leaf or a bar or non-U.S. gold, you got to turn it in. It's illegal. And I mean, they could do that with eagles and buffaloes too. I'm not saying they can't or they won't. I mean, it's a matter of degree. Could they do it? Could they change the law with collectibles? Yeah, they can. I do think that where this nation is now, there would be a major, major pushback and major difficulty in enforcing that.
Yeah, we've been seeing the evidence of pushbacks being basically not publicized on mainstream media. There have been pushbacks in, France and Australia and lots of other countries where there's big demonstrations. Some people say hundreds of thousands, some say millions marching, and those do not make the evening news. So I think a lot of people are getting discouraged, thinking, what the heck, doesn't the humankind not have a backbone anymore? But I think a lot of it's people are being shown a selected vision of what's actually going on versus the fact that people are in fact protesting.
You have to understand that overseas, I mean, look at Australia, look at Austria, look at Netherlands, Belgium, the lockdowns, Canada, the lockdowns, the laws, they're not laws, they're mandates. And they've pushed too far. But the reason they pushed as far as they did, the governments, is because you're talking about populations that are not armed. For the most part, you look at Australians gave all their guns away. And I think that a lot of the mandates that are going on in Australia, if they tried to do them here in the US, I think you'd see all kinds of bloodshed, and I don't think whatever the plan was would get done.
Another question people have asked, and I'm grateful to all the people who submitted these questions. I've been presenting them kind of in the order that it occurred to me that they would unfold. This most recent one is from Fontana Ranha. Bill, what role do livestock play in your reset survival strategy? I love gold and silver, but they're not productive assets. What productive assets should we own? Livestock, land, tools, etc.
Well, yeah, obviously, living on a farm is going to be better than living in a condo in New York City. I mean, you want to live in a rural area. If you can farm yourself, if you can have chickens, goats, cattle, whatever hand tools, not necessarily electric tools. So you probably want to back up your whatever electric tools you have. If you use electric saw or chainsaw or whatever, it might be a good idea to get hand saws. If you've got to cut wood by hand instead of with gasoline or with electricity. One thing about land, people need to understand that the value of land, the value of property right now has its current value because it's been borrowed against. People have borrowed money to purchase properties, to purchase homesteads, to purchase houses. Once the credit market breaks, I believe you're going to see serious, I think you're going to see a real estate crash, but I think you're going to see serious softness even in farmland. So don't fool yourself and think, that if you're paying these inflated prices for farmland now, that they're going to be more inflated later. In dollar terms, maybe, but not in terms of gold, not in real terms. Right, you cannot eat gold, you can't eat silver, but if there's no money, if banks are closed, if the system has come down, I know more than where I live, I know more than a dozen farmers that will sell crops, livestock, you name it, for metal. So all of a sudden, metal will come back into the system from a barter standpoint. So even though you can't eat it, you can use it because farmers understand real money.
That leads up to the final question, and that is, how much gold and silver is enough? People ask that all the time. I've heard many different answers, everywhere from, you should have a baseline of 5 to 10% to compensate for everything else in your portfolio. You suggested one rule of thumb just earlier, and that was have enough to pay off all your debts. That's a meaningful way of talking about it. What guidelines do you discuss with people when they're contemplating that question so that they can think it through?
I have recommended for years that families have one bag, which is $1,000 face, one bag of junk silver per person per household. So if you're a family of four, $4,000 face should be more than enough. If it's not enough, then we're living in Mad Max and it's not a world you probably would have even survived to that point. And I get that same question done again, how much should I put into gold and silver? And just for the last probably 2 or 3 years, my standard response now is whatever you don't want to lose. Because we live in a world where everything is supported by credit. And when credit breaks, everything breaks. And gold and silver are the only two currencies on the planet, only two monies on the planet that have no liability attached to them. They are pure asset money, and they're the only asset money on the planet. Everything else is a liability.
Bill, if people want to get a hold of you and follow your work, where should they get connected in?
You can either go to www.JSMineSet.com, or you can contact me directly. My email is b@hotmail.com.
Well, we're certainly grateful for your presence here. And I know you appear on channels all over the web. So folks, if you just search on any of the major streaming platforms such as YouTube, Brighteon, Rumble, under Bill Holter's name, you'll get plenty of good education. And Bill, I'm grateful on behalf of all of our listeners and our viewers for you joining us here on Liberty and Finance this first time.
Thanks for having me done again.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.